Welcome back. You're watching Indian Open. Let's see how the Indian, or rather Asian markets are faring at this point in time. And we are looking at weakness for the Hang Seng as well as Shanghai. Both of them down nearly 1%. But that has had very little to do and very little impact as far as the HDFC Nifty futures are concerned, considering it is indicating an up move around 1.3%. Well, on the back of that, what can we expect from the futures and options space? We have Navneet Saluja D'Souza standing by to give us an update on the F&O setup. Navneet, surely a lot of things have changed quite dramatically last Friday.
Of course, yes, Agam and Devina, good morning to both of you. The base for the market has moved higher after the Indian markets witnessed one of its biggest rally on Friday. So even if you look at the data, whether the rally was on account of short covering or not, remember we've entered the monthly expiry week as well. So on the Nifty futures side, across the series, open interest went up by 8%, telling you there were fresh long positions being taken on Nifty futures, even when the market scaled higher by almost 5% on Friday. But on Bank Nifty, remember that was the index which rallied nearly 9% in trade, and their open interest across the series was down 1%, telling you there was some bit of short covering which was taking place. But whether there is room for more short covering rally or not, I'll just tell you that in a bit. But overall, if you look at the options data, as I said, this was the second biggest rise that the Indian markets have ever seen, of about 561 points on Nifty, and this was also the largest single day gain seen in the last decade. The base moves higher. If you look at the options data, the maximum open interest on the put side for this weekly expiry is at the 11,000, and on the call side it is at the 11,500. But with a structural move like this, I think the SGX Nifty is already suggesting we could be somewhere in the range of 11,475. Let's see if we break away that 11,500 mark as well. And looking at the stock futures data, the bounce was definitely on account of short covering, and this you can stick your neck out and say it, because out of the 161 stock futures, 121 stocks saw short covering, out of which 142 stocks gave you returns of about 1 to 18% in Friday's session, and there were just about 12 stocks which ended the day in the red, and those were a couple of NBFCs and also stocks from the IT space.
But Navneet, there are a lot of shorts in the system from the FI point of view. Is there any reversal?
Oh, yes. So the interesting part is there was no major unwinding of short positions which took place, but there was more of long bets being taken. So they added a lot of long positions on index futures, also added longs on stock futures, and they bought more of calls and they wrote more of puts. So let me take you through first the index futures data. Almost 51,000 contracts were added. I've not seen this in the recent past ever. Shorts went down by only 7,800. Remember, open contracts, short positions by FI so far on index futures is still at 1.7 lakhs. So that tells you there is more room for short covering. Let's also look at the options data and the positioning first. Remember, before Friday's session, they were net long only 25%. That ratio has gone up to 39% now, though they still remain net short on index futures. Going ahead and looking at the stock futures data, this is the stock futures. Almost 33,000 contracts were added for the stock side as well, an unwinding scene of the shorts contract. And even on the options data, you did see more of call buying and writing of put. 40,000 call long and 41,000 put short contracts were added, telling you ahead of expiry and after such a big announcement, traders and especially the FIs, they were back in the markets and placing more of bullish bets. With that, it's back to you guys.
Thanks a lot for that, Navneet. But it looks like they were missing from the cash market side, even though we had a record-breaking turnover on Friday's session, which again points to the fact and to reiterate what Navneet said for the F&O space. Even with regards to the cash market space, the headroom to see more FIs coming in is still there. So you know they missed out on a 5% sort of a day with just 36 crores long. So there is that headroom left for them to come back in a big way. Bringing in Avinash Gorakshakar, Head of Research at Joindre Capital Services. He's joining us right now on the show. Avinash, thanks very much for taking out the time. A big positive in today's session also, could anticipate to see a positive open on the back of what the SGX is doing. But, what's the trade looking like now? How do you position?
No, I think Devina, clearly what came about last week was completely unexpected, and this is one of the biggest reforms this government has announced. I think the markets are clearly very excited that cut in corporate tax rates actually means two things. One is earnings growth gets a big boost, and return on equity, which is a long-term kind of driver for equities, is now going to improve. So I think apart from the fact that FY20 has been a slow year as far as demand is concerned, I think the markets would definitely be penciling in a far stronger earnings growth for FY21. Hopefully, I would believe that the beaten down sectors like autos, capital goods, construction, I think here you could find a lot of buying activity, because these have been sectors which have been beaten down badly. So I think it's going to be a hectic day, and I think one should not be surprised that even today one could see a gap up opening, probably led by some amount of short covering, and obviously a change in market sentiment, which is clearly was the need of the hour.
Okay, the other part also being hotel stocks is something to watch out for. GST rates, for a few segments have come off.
Yeah.
What would you do? Do you feel that this could be also an area to look at?
I think clearly, hotel stocks definitely had started moving up, and I think the change in tariff structure, especially for hotels between the 1,000 rupees to 7,500 tariff, I think smaller hotel companies like typically a Taj GVK or typically even a larger player like Indian Hotels, I think one could definitely see some sort of value buying coming here. Our sense is that we may not see the kind of earnings trajectory immediately, but obviously the third and the fourth quarter are likely to be much better, and I think definitely it's going to be a big pull factor as far as services from these players are concerned.
Right, Avinash, the other boost, of course, provided by these corporate tax cuts is in the auto sector. We are looking at a lot of upgrades now, but the real question is the fact that volumes have remained relatively weak remains, and that we are also expecting them to stay weak at least for the next couple of quarters. How do you go about, would you go about, bottom fishing here? What's your way of going forward? And if at all you could suggest some names in this sector?
My guess is, I think, Agam, I think clearly looking at these levels, one should not immediately hurry to buy in. But I think clearly the markets are definitely excited, and obviously a large amount of buying which happened on Friday as well as will happen in the next few days is going to be largely short covering. So I think overall, the sector will take some time, but the sentiment has obviously changed for the better. And I think probably companies like Maruti or typically even an Ashok Leyland, I would not be surprised that despite the fact that earnings may get some time to get reflected in numbers, you could obviously see sentiment changes, and obviously these are stocks which I would believe that could give a decent kind of risk reward if one is willing to wait for the next 12-18 months.
Big tax savings, for the larger majors in the index as well, Ultrasec Cement for one, to see a bigger tax saving. How would you play this angle? Would you look at the companies which have a larger tax saving which could aid profitability in a meaningful way to start?
I think clearly, the tax saving itself is going to be the key driver, Devina. I think if you look at most of the FMCG companies, these are full tax paying companies. If you look at Nestle, Britannia, I think these have been stocks which have been beaten down largely because of demand kind of concerns. And I think clearly the markets are elated that despite the fact that volumes are definitely struggling to grow, hopefully with a tax rate of this proportion, I think it's going to definitely create a kind of scenario where some part of the benefits are going to roll out to customers. The government would also benefit. So I would believe that, I think clearly the frontline companies which are full tax paying companies are the first ones to benefit. I think obviously earnings growth could measure differently for various corporates. But overall, I think it's going to be a very exciting kind of period, at least for the second half. We may not see these kind of earnings, numbers getting impacted in the quarter 2, but quarter 3 and quarter 4 could possibly see some sort of improvement, not only from the demand scenario, but also from the earnings kind of scenario, especially from the tax write-backs which could be seen in the quarter 3 and quarter 4.
Well, it's interesting that Avinash has spoken about that, because you have companies like Hindustan Unilever, you have companies like ITC, Nestle, Britannia. All these companies have tax rates of over 30%, in fact anywhere between 30 to 35%. And if their effective tax rate comes to below the mark of 26%, there naturally will be significant tax savings. But that's it, Avinash. How do you think that the companies would deal with these tax savings? Because they are tax savings, can they be passed on in terms of the top line and pricing? Do you think that something like that can come through?
No, I think obviously, some amount of tax benefits which these companies get, Agam, would obviously be passed on to customers, and that would obviously help them, revitalize the kind of volume growth which is the need of the hour. So I think clearly, if you talk about automotive companies, FMCG companies, auto component companies, I would believe that this becomes a very strong incentive for them to actually, reduce prices and actually then look at stronger kind of incremental volume growth. So I would believe that it's going to be a win-win for both the customer as well as the corporates going ahead. And mind you, these are long-term measures. Return on equity is something which most of the analysts would be penciling a stronger ROE, and I think that is something for long-term. So obviously, it's going to be a big benefit, for corporates going forward.
I just want to ask you about ITC because, even with all of this, ITC on Friday session was just about flat. I mean, there seems to be no trigger that can make the needle move for ITC because the government banned e-cigarettes. That too didn't see a very meaningful move on the stock price. You've got this move, the tax savings bit. HUL went up 8%. ITC was just about flat. So when you're even wanting to take a pick in the FMCG space, and for people who have ITC in their portfolios, what do?
No, I think clearly, Devina, if you look at the relative kind of price performance of ITC vis-a-vis other cigarette players, I think it has underperformed. If you look at Godfrey Phillips, I think one noticeable part about Godfrey Phillips is that it has been eating into market share. And ITC has been losing market share. I think overall, although the tax benefits would trickle down to a better earnings growth for ITC, I think what the market would obviously be looking at is stronger volume growth for the core cigarette business and a stronger kind of contribution from the other non-cigarette business like FMCG. So I think it's going to be a matter of time. I think markets would obviously look at these numbers very critically before some sort of significant re-rating happens for the ITC stock. But overall, I think at these levels, clearly it looks attractive from a long-term standpoint of view. And I think once numbers start trickling down, especially the volume growth numbers and the margins, clearly I think there could be a decent chance of a re-rating here.
Okay, well, after the kind of moves that we've seen, Avinash, are there any possible areas that you think that should now catch up? Because of course, Friday was a day where we saw a lot of frontline stocks move up. What about some of the mid caps that you think that still have a little room to move up based on the announcements?
My sense is, I think, our sense is that possibly the auto component sector, we have seen, stocks being beaten down very badly. So I think stocks which are possibly, ancillary plays to Maruti or maybe Tata Motors, these could be definitely good bets. I think some stocks like say Jain Axles or typically a Motherson Sumi or a Bharat Forge, I think these are companies, Agam, where possibly one could see a decent kind of risk reward. And I think when earnings visibility is more or less assured, taxation rates are reduced, and obviously, the hope remains that at least not in the coming quarter, but at least post the December quarter, one could see some sort of positive growth, volume growth trickling in for the commercial vehicle and the two-wheeler and the passenger car sector. I think you're going to see definitely these kind of companies getting benefited because obviously volume growth is going to be a big kicker for them.
Okay, well, there you have it. Those are just some of the views that, some of the stocks and ideas that you can keep an eye on, but there's also plenty of news out there as well as some brokerage calls for today where we once again have our research team who's joining us. Good morning, guys. Thanks for joining in. Nikki, let's start with you. What about the stocks and news today?
Biocon, a negative development first, where US FDA has conducted an inspection out there, and the company has received Form 483 with around a total of 8 observations, but for one particular facility 4, and for the other one it's 3 and plus general 1 observation. The US FDA had conducted a pre-approval inspection of this unit from September 10 to 19. So this is one counter that we like to keep an eye out on. Petronet LNG, which has signed an non-binding MOU with Telerin Inc. The Petronet is expected to invest around $2.5 billion for 18% stake, and in turn would be negotiating to purchase around 5 MTPA of LNG. And MCX, which has will be considering FII limit in the company to 49%, so some amount of positive traction on that front. And Alchem Lab, where the company has acquired Catchet Pharma from its subsidiary for a consideration of 50 odd crore. Yet another pharma name makes it to the list, where Cipla has received an EIR for API manufacturing facility in Bengaluru. IFL Wealth Management, where this particular counter remains to be in focus. Small Cap World Fund continues to buy in this counter and has additionally gone ahead and acquired 5.83 lakh shares. Vanguard Group, which is acquired in 0.52% stake in Vinati Organics. And last, we'd also like to keep an eye out on Titan, which is going to be meeting in Rare Enterprises and a few other investment managers from September 23 to 26 onwards.
Okay, thanks, Nikki. But Sumit, what about broking calls for today?
Well, a couple of them. The first one is on Ashok Leyland, where Nomura has upgraded the counter to a buy from neutral and has hiked the target price to 87 from 72. Now, according to the brokerage, the investment-led recovery should benefit the commercial vehicle manufacturers. Now, it believes that this significantly improves the visibility of commercial vehicle cycle recovery from financial year 2021. Now, it is also expecting the demand benefit to come across the sector as the GDP growth improves over the time for India. Now, the brokerage has increased the valuation multiple, which has led to this hike in the target price, and as it believes that the current valuation factors in the tough near-term weakness for Ashok Leyland. The second one is just on Petronet LNG, where Bank of America Merrill Lynch has maintained its neutral rating on the stock but has hiked the target price to 282 from 245. Now, according to the brokerage, the Tellurian deal will aid diversification, but there is also some project risk involved with this. Now, the deal introduces a large project risk in terms of timing, cost to Petronet's free cash flow, which in turn should cap the valuation multiple for the stock, says the brokerage. Now, this LNG purchase will fill large spare capacity at the Dahej and Kochi facility of the company, but the company might find it difficult to sell this gas in India, which GAIL, as in currently GAIL, has been facing. However, the brokerage has hiked the target price to factor in the lower taxes benefit that the company might incur in financial year 2020.
Thanks, guys, for joining us and getting us those details. But Avinash, I want to take the matter of Biocon forward. Now, a few weeks ago, we had news that we had a bunch of private equity investors who are interested in buying the company's biologics business. That said, of course, we're waiting on the update and development when it comes to, it's, well, of course, several of its drugs, in fact. What's the way forward here? What is your view? How would you address Biocon specifically, especially given that it is not like many other, pharma players?
No, I think clearly looking at the price trend currently, Agam, I would believe that the biosimilar space has already shown a very sharp improvement in Q1, and our sense is that we could see this trajectory and momentum continuing in Q2 and Q3. Hopefully, I think clearly the company should benefit from some recent molecules it's been working on, and our sense is that earnings growth definitely would get a significant boost in FY20 and FY21. So I think clearly at these levels it could be a decent kind of portfolio pick, provided the time horizon for investor is at least 12 to 18 months. I think there could be many more earnings triggers which could possibly open up in this timeline.
All right, that's Biocon for you. The last 6 months have not been all that great. The stock's been down about 26% and also remember, just last week you had a few downgrades coming in there. Price cuts have been downgraded to about 300 to lower. In this session, I think Bank of America Merrill Lynch put out a note on Biocon. Their initial price target was about 350. They came down to about 310 on the stock. Stock's anyways much below that, about 228. Let's talk a little bit more about the focus shifting to the Capex heavy stocks, infrastructure names, L&T. What would you do with the likes of this one? Because now there's a bigger push coming in.
No, I think clearly Capex cycle could definitely get a significant boost, and I think along with the engineering companies, I think even construction companies like NBCC typically could definitely see a lot of activity, considering the fact that now Capex could definitely be given a big incentive. In fact, the government's decision to actually give a 15% tax rate for new companies, for new manufacturing facilities, I think that is also a big positive driver and would obviously encourage a lot of companies to put in fresh investment, especially not only from the local guys but even from the foreign investors who want to invest in India. So I would believe that L&T, considering the kind of order book and the kind of trajectory, we could definitely see a decent rise. I think clearly, I think in terms of the execution and in terms of the order book inflow, I would believe that that is something the markets would keep a closely watch. But overall, I think it definitely looks attractive.
I want to ask you about expectations of the overall trading volumes picking up, and now that if you see the market start to start to trend higher, more participation, more retail activity, more turnover, more income for the likes of a BSE. Would you feel that stock exchanges now, and particularly BSE, is a material gainer? in this process?
I think all capital market intermediaries would definitely benefit. Apart from BSE, I think stocks like CDSL also could possibly get the kind of rub-off benefit. Typically, market sentiment changes obviously mean that volumes increase, and obviously capital market related stocks obviously do benefit significantly. And I think it's only a matter of time that the markets would obviously see these changes getting reflected in numbers, Devina. Our sense is that BSE, which completed a buyback, obviously looks well positioned, hopefully, if these volumes keep on growing. And CDSL definitely is a unique play in terms of the kind of margins and in terms of the monopoly positioning they have. So I think clearly, both these companies should do well over the longer term.
Of course, we're also going to keep an eye on, well, broking companies which are listed, such as ICICI Securities, or for that matter, something like Sanctum Broking. And of course, you also have asset management companies which also stand to benefit, given the point that Avinash is making with respect to capital markets. But it's time to get in our technical analysts. We have Ruchit Jain, who is here with us from Angel Broking. And just in moments from now, we will also have Ashish Chaturmohta, who's joining us on the show. Ruchit, good morning to you. Your way forward from benchmarks, well, we've been hearing, at least as far as some of your systems traders and rule-based traders are concerned, that there could be more strength in store. What is your reading of this?
Hi, very good morning to everyone. Definitely, if you look at last 1.5 months, previously after the union budget, when we had seen a low top, low bottom structure, that got arrested somewhere in the month of August, in mid-August. And post mid-August, we had seen a sideways phase wherein the index had consolidated in the range of 26,650. The index had consolidated in the range of 11,600 on the lower side and 10,900 on the higher side. So 10,600 to 10,900, 11,000 was the range in which it was consolidating. And in Friday session, we saw a breakout from the higher end of this range. Now that is indicating that from the downtrend, we first changed the trend to sideways, and from the sideways, we have now started an uptrend, which means that the previous highs has been breached once we got a breakout about 11,000, 11,100, and there is now a confirmation in the sense a high top, high bottom structure has been formed, and also the up move has been supported by broader market participation. Usually, whenever we see a bear market pullback moves, the broader market does not participate in such pullback moves. So I think yes, the markets have started an uptrend now. 11,100, which was the earlier resistance, would now become a support. And yes, there on Friday session, in stock specific momentum, the volumes were quite high. So this is an indication that going ahead, we should see some good momentum on the upside. Now, if you really ask me what to take a trade on the index front, it is very difficult to take any fresh trade on the index right now, because if we open a gap up opening, if we see a gap up opening of about 150 points, which SGX Nifty is indicating, the stop losses would be too far to take a fresh trade. So my advice would be to hold existing longs, if any, keeping a trailing stop loss method, and focus on stock specific momentum where there could be good trading opportunities even now.
Ashish, are you also of the view that this is probably a change of a trend and not just a dead cat bounce, and whether or not it's prudent to take a trade post open today?
Good morning, Devina. So yes, I think so, because if you look at in the last couple of trading sessions, in fact on the last call, we discussed about an inverted head and shoulder being formed on the daily charts, and which is a reversal signal. Although it almost tested the close to this lows of 10,650, but didn't broke those lows, and eventually the crossover above 11,100 was a clear decisive breakout on the inverted head and shoulder formation. So I believe that yes, now 11,100 itself is going to be an important support because of the neckline breakout which has happened on the inverted head and shoulder formation, and the projected target for this inverted head and shoulder is around 11,600, but that's a reversal pattern target. I think broadly, on this up move, we might test 11,550 to 600 on an immediate basis. Post that, I think markets might see some consolidation in a range between 11,300 to 11,500, 600, but broadly the trend has reversed on a very, very strong decisive note. And when we talk about trend reversal, we need two things. First, there should be a strong reversal from any important pattern, and second, the volumes. So both are there, and I think that gives us a sense that now 11,000, 11,100 itself is going to be a very, very strong support for the market.
Okay, well, before we take in our stock picks from our technical experts, on to our special segment, Bloomberg Edge, where we have Yash Upadhyay, as usual, who tells us about a pattern that the Bloomberg terminal has thrown on a stock. Yash, what's on your radar? Good morning.
Morning, Agam. So we are looking at ABB India, and like most of the stocks in yesterday's day of trade, this one too gave a huge move in Friday's day of session. It closed almost 6% higher, with volumes too being significantly higher over its 30-day average. And with that, it has managed to take out the proprietary Bloomberg indicator, which is the trender indicator. The trender, as you know, uses the average true range for the purpose of calculation. It helps generate a buy and a sell signal, and also helps you manage your stop loss. Now, coming back to the price chart of ABB India, what we've seen in yesterday's day of trade is that the trender line, which is the red line over here, that stood somewhere around the mark of 1371, and that was decisively taken out because the stock closed significantly higher above that mark. It closed, in fact, above 1400 levels as well, and that is after twice coming to the levels of close to 1400 but not having sustained above that mark or even close above that mark. The big move that we saw in yesterday's day of trade, in Friday's day of trade. Additionally, on the weekly time frame as well, ABB India, when it was trading on Friday at the lower end of its rising upward channel formation. So as you could see, this is the weekly chart, and it was right at the bottom around the lower band of the rising channel, and the RSI too had somewhere bottom out around the mark of 4550. So there were clear signs that the stock would reverse from here. The RSI giving a positive divergence with that, and there is significant room of upside. So most of the stocks that we saw that ran up in Friday's day of trade, they were either hitting fresh 52-week high or lifetime high, but there is a fair way for the stock to go from here at least up to the mark of 1700, which is a sizable enough upside. So ABB India is one counter you should watch out for.
How well has this worked in the past, Yash?
So Devina, 3 after the last 4 times that the trender indicator has given a positive crossover, the next 1 month closing average returns have been close to around 7.1 or 7.2%.
Okay, Yash, thank you so much for getting us that Bloomberg Edge as far as ABB is concerned. We'll be keeping an eye on the levels and all those the factors that Yash has spoken about. But let's also take the stock picks from our technical analyst today. Ashish, coming back to you, your picks for today.
Yeah, so my first pick would be a long call on ICICI Bank. Stock has seen a very strong reversal on the daily and weekly charts and has crossed an important resistance point, which was close to around 415 area, and we have closed above that. So I think at these levels, ICICI Bank is a buy with a stop below 410. On upside, I'm expecting stock to cross its all-time high territory, which is around 450 area. So that's a call on ICICI Bank. Lal Path in the diagnostic space, we discussed last time, also has hit a all-time high on Friday's trading session, and I think this is one stock which is in a very, very strong uptrend. And on the monthly charts, there is a breakout after consolidating for almost 2 years in a range between 1280 to almost 900. So I think here one can see a sustainable uptrend from even these levels. So 1270 would be my trading stop loss. 1400 is a short-term target I'm expecting in Dr. Lal Path. In the cash segment, again, HDFC Life is one stock which we are liking. Stock has given a strong price volume breakout on Friday's trading session, and here one can expect the stock to hit 610 area in next couple of few trading sessions. 530 would be my trading stop loss, and in general we are quite positive about the insurance basket. So I think even names like ICICI Lombard and ICICI Pru can see a very strong uptrend from current levels.
Okay, Ruchit, the same question to you. Your picks for today?
Yeah, I have few buy recommendations. The first is a buy call in Mahindra & Mahindra. Well, most of the auto names have seen a huge underperformance in last few months, and with the change of trend in the broader markets, I think there would be good momentum in the auto space, which we have already seen in Friday's session. Now, M&M has given a breakout from about 1.5-2 months of consolidation phase, so we are expecting an up move towards its 200-day moving average. So traders can go long with stop below 545, expecting target around 610. Philips Carbon is my second recommendation from the cash segment. Recently, we have seen good volumes along with the price up move in this stock, and if you look at the positional charts, then on the long-term charts, the recent lows are around its good support level. So we are expecting an up move towards 145 next 1 or 2 trading sessions itself. Traders can go long with stop below 123 for target of 145. And Deepak Nitrite amongst the cash segment is my third buy recommendation. Now, a long consolidation phase, but one positive thing about this stock is that within the mid-cap basket, the broader correction that we have seen in last 1.5 year in the mid-cap space, this stock has not corrected significantly from its highs. So already a relative outperformer within the mid-cap space. It has taken support around its 200-day moving average, and hence the prices could see a resumption of its higher degree uptrend. Traders can go long with stock below 267 for target around 325 in short term.
Okay, the big one also being Reliance Industries now, Ashish. Do the levels to monitor change here? It's at 1254 now.
Yeah, so I think, even in our last discussion, we mentioned very clearly that 1180 is an important support zone for Reliance, and somehow it managed to sustain above this 1180 mark and did not break the, the gap up level which we witnessed on 13th of August. And then there's a reversal on Friday's trading session with very strong volume. So I think on this up move, stock can see 1320, 1330 area in a shorter term time frame, and for that I believe now even 1220 itself is going to provide a very strong support to Reliance.
Avinash, does IT take a back seat now? As in, we've got all high beta in all guns blazing. Expectations are that you'll see more alpha created within this space. So does IT take a back seat?
At least for the time being, it does take a backseat, because primarily, most of the IT companies, they used to enjoy a lower tax benefits due to their SEZ status. But I think obviously a bigger positive for them in the longer term is that once these SEZ benefits expire, depending on how many years these companies get these benefits, I think obviously later on they would definitely be taxed at the nominal tax rate. So obviously longer term, it's also a big positive for the IT companies, like TCS, Infosys, HCL Tech. But definitely in the near term, I think what has been beaten down very badly, especially the cyclical and the domestic driven sectors, I think those are the sectors and the stocks which would obviously hog the limelight initially. IT would definitely in the near term obviously consolidate.
Okay, well, two names I want to address because of the sharp up move that we saw in the consumption space, of course, on technical terms. First one is Avenue Supermarts, because we saw a sharp up move on Avenue Supermarts. Well, of course, the gains in Avenue Supermarts came a tad later as compared to the rest of the market last Friday, but it's currently at 1761. Ashish, what's your view here? How are you looking at technicals develop?
So we are quite positive about Avenue Supermarket. In fact, this is our top pick within this segment. Also, the reason being, if you look at technically, for last 15 months, since June 2018, the stock has been consolidating between an all-time high territory of 1700 to lows of almost 1240. And after this strong consolidation of 15 months, we have seen a decisive breakout with a very, very strong volume of this long-term 15 months consolidation near its all-time high. So I think the new uptrend has started in the stock, and going forward, we believe stock has a potential to see at least 2000 kind of zone in coming days, because if you look at the consolidation zone, it was almost 500 rupees kind of consolidation which we witnessed, keeping even 61.8% retracement of this 500 rupees. I think at least 2000 is a target one can easily expect in Avenue Supermarket, and going forward I think now the trailing stop loss should be closer to 1670 1680 area.
Okay. And the other one that I want to address is Titan. Titan also saw a very sharp up move, but it was also met with a little bit of selling coming through, as far as your highs are concerned. Ruchit, how would you address Titan? More legs to this rally?
Yes, quite possible. One of the things that is noticeable in Titan is that in this month of September, when we had seen the index correcting from 11,100 of levels to 10,710 levels, Titan was an outperformer when markets were going down. And after this outperformance, we had seen in Friday's session the up move again getting supported by very high volumes. The profit booking in the end that was seen in Titan, that was from its previous all-time high, which was around 1334. And even if you see in Friday's session, the high was again 1334. But ultimately, looking at this outperformance in the initial few days and again good volumes coming in, I won't be surprised if this high would be crossed. So the trend continues to remain positive.
Okay, while we're at it, we may as well address Jubilant Foodworks. Ashish, you're noticing something interesting here?
Yeah, so I think again, this is one stock which has been consolidating since August 2018, and then there's a double bottom formation on the monthly charts closer to this 1100 area, and now we have seen on the weekly charts strong resistance of 1370 gets crossed over. So I think all this is indicating that a stock is entering into a very strong uptrend. On upside, I'm expecting 1480 as a target. On downside, 1340 itself is going to be a very, very strong support for Jubilant Food.
All right, we'll watch out for all of those names. I think we're just about 13 seconds left to go for market pre-open. Asia as a pack is not doing a whole lot much, but the outlier is SGX Nifty, obviously, with gains of about 1.25%, 140 odd points higher. This morning's pre-open on your screens, initial ticks suggesting a positive start for the Nifty 50. That's 11,437. We'll wait for these prices to cool off and consolidate. 500 points on the Sensex. Coming down to the individual movers on the index and on the Nifty 50. So starting off first with the big gains, there are a handful of losers in today's session, but the big gains are coming in the form of some of these banks. Ultratech Cement is up about 5%. JSW Steel is showing you an unnatural uptick of 10%. We'll wait and see if that consolidates. Bajaj Finserv is up 3.5%. ITC up 3%. Eicher Motors up 2.9%. L&T, HDFC Bank, IndianOpen Bank, GAIL. These are the names that you've got. ICICI Bank is up 1.8% again. TCS 1.5% higher. Axis Bank, Tata Motors, Tata Steel, everything's up. Even Infosys marginal, but about 0.1%. Only 3 stocks so far in the red on the index. That's HUL, Bajaj Auto and Bharti Airtel, which are looking weak. On the currency, not much of a change from Friday's close. We already saw it dip below that 71 to the dollar mark. It's still about holding on to those gains, about 70.94 to the dollar for the rupee.
Okay, well, if you want to take a look at some of the mid-cap names, we do have some advances in Edelweiss. It's one of the stronger counters in today's day of trade. And do remember, Edelweiss was also one of the big movers as far as Friday is concerned. We have Oberoi Realty, which is also up and about, advancing further. At this point in time, indicating a 4% up move. We have the likes of Canfin Homes, which has been quite subdued over the past few weeks, but looking at a little bit of recovery, seeking to move towards the 400 rupee mark. We have Cyient, which is looking at a little bit of an up move today as well. Of course, Cyient has been one of the weakest stocks as far as the IT industry is concerned. That is also indicating a 2% up move. Godrej Properties, bring that up as well, because we do have a lot of traction in realty in general, and of course in conjunction with Oberoi Realty, Godrej Properties also looking at around a 1.5% increase. And finally, let's pull up Pidilite. It's seen a downgrade recently. Credit Suisse has downgraded the stock. We saw that weakness come through, but today it seems like it's looking at a little bit of recovery. Let's just wait and watch whether or not it can hold on to the gains indicated by the pre-open. On the whole, well, things are not as bad in the broader markets either, Devina.
All right, let's take a look at some of these names that we just discussed, and therefore the kind of technical moves on them and whether you can buy them at these rates or no. A Z for one. Ashish, what would you do with this gun? Obviously, there is a fundamental overhang, but at 312, didn't have a big move on Friday session. In fact, probably ended the day lower, if I'm not wrong. But today's session about 3.5% higher.
See, Devina, there is no big trend reversal in the stock. Only thing is we saw some good recovery from the lower end of almost 273 to 301. So intraday that was a massive recovery, but still the stock closed on the negative side on Friday's trading session. I think till the stock does not cross 320, I think the broader trend is still weak. I'll use this opportunity to reduce my long exposure towards 318, 320 area in Z.
Okay. Avinash, we've spoken about IT to a certain extent, but my question is perhaps more to do specifically with your mid-cap IT counters. The stocks like Mindtree, Emphasis, perhaps Mastech, where there has been a little bit of an ever so slight improvement in earnings. How would you play it as against some of the large cap names?
My sense is, I think, Agam, in the near term, I think, selective stocks like, say, a Persistent or maybe a Mindtree could see definitely good amount of earnings traction. But I think overall, looking at the kind of market sentiment and especially the kind of corporate tax cuts which have been announced, I would believe that, we could see a moderate kind of upside. I think the bigger upside could be seen, in companies which actually largely benefit from the bigger tax reduction from 34-35% to, the 25% tax slab rate. I think this is going to be the near-term trigger, at least for the very short term. But over the longer term, I think mid caps, which obviously can show a decent earnings on the revenue as well as on the operating margin side, especially stocks like Persistent. I would believe that their product strategy is really working out, and I think probably at these levels one could definitely look at a decent risk reward.
Okay, well, two other counters from the auto sector that I want to address technically. First of them is Ashok Leyland, and again, well, things have, it seems, changed considering the kind of up move that we saw, well, last Friday and of course today, as per indications of the pre-open. It's currently at 72.8. Ruchit, your view here, of course, we did have a lot of people who were short on Ashok Leyland just last week, but where do we go from here?
Well, certainly, no, this was one of the auto counters which had underperformed even when we had seen the other stocks showing some pullback moves. But yes, on Friday session, the previous high, which was around 68.50, has been taken out. So I think this pullback move would extend at least towards this 200-day moving average, which is now placed around 80 levels. Now, will this be a bottom, and would we see a significant uptrend from here on? That is a very difficult call to take right now. But in immediate term, if any short positions, those should be exited, as we can see the stock heading high towards 79 to 80.
Okay, and the other stock that I wanted to address was Motherson Sumi. This is where I'm going to take a fundamental view here, because it's not necessarily only dependent on well, revenues from India. It has businesses across, and that this one has also seen a little bit of a recovery, in fact trading well below the mark of 100. Avinash, would you be circumspect about Motherson Sumi, or do you think things have genuinely changed for this company?
No, I think, Agam, if you look at the price movement, I think the stock has been beaten down extremely badly from higher levels, and our sense is that despite the fact that Q2 and Q3 may not show any material improvement, I think obviously some sort of benefits coming in the frontline automotive sectors, both from the domestic and the international markets, would obviously help them. They also pay a higher tax rate, so obviously to that extent they would benefit. But I think clearly in terms of the opportunity from the domestic market, which had been beaten down in the last 1 or 2 quarters, one could definitely see a reasonable risk reward, provided one is taking a longer term view. In the short term, the stock could possibly remain range bound.
I want to see Reliance Capital and what that stock's been doing. We've got a debt downgrade that's coming from Care Ratings. The stock's done about 6% in this session. Our NAM is the other one. Pretty volatile in terms of the moves that we've seen on the stock with regards to news surrounding pledge shares. Reliance Capital making clarification with that regards. The stock's up 1.5% in today's session. Ruchit, any of these two that you track, Reliance Capital or RNAM?
No, frankly, if we see last few months, or in fact last couple of years, this stock has only seen a low top, low bottom structure, and we have not seen any kind of up move getting supported by higher volumes. Less due to up move in the pullback move in the broader markets, we could see some positive momentum. But I think within the mid cap space, there are many other names which are quite attractive, rather than trading such underperformed names.
Okay. I'm sorry. We do have a query on ONGC. Of course, it's a large beneficiary of the tax cuts that we've seen, and it is indicating a 2.9% increase. We have a query on this one as well on the social pages. Ashish, how does this look technically?
So technically, I would call it as more of a throwback rally, and because of this news, obviously it has crossed last 7 weeks high, and some more upside could not be ruled out. But around 144, 145 area, that would be a very, very stiff resistance zone for ONGC. So if you're on the long side of the trade, and I think if it goes to around 144, 145, that's a good area to reduce your long exposure in ONGC.
Okay. And let's also take up HDFC Bank while we're at it, because again, one of the biggest contributors as far as the gains on the Nifty is concerned last Friday, and indicating another up move around 5%. Ashish, I'll come back to you on this one. Your view here, how would you address HDFC Bank?
So we are quite constructive about HDFC Bank. In fact, I think this is one stock where a move towards its all-time high territory is possible. 1250 is an all-time high, and once the stock manages to cross this, then I think next target could be in a range of 1320, 1330 area. So we believe that HDFC Bank is going to lead this rally, and with 10% weightage in the index, I think HDFC Bank is poised for a stronger up move, and that will be further, that could be one possible reason where we can see index also crossing this 11,500, 600 resistance zone.
Right.
Okay, we were just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Care Ratings downgrades Reliance Capital's debt worth $5 billion to default.
Goldman Sachs raises the Nifty 12-month target to 13,200 from 12,500. Morgan Stanley raises the Sensex target, June 2020 target, to as much as 45,000 from 40,000. The brokerages expect Indian corporate tax cuts to revive earnings growth.
Petronet LNG and Tellurian have announced signing off a non-binding MOU. Petronet LNG will invest $2.5 billion for an 18% stake.
Biocon receives a Form 483 with observations from the US FDA for its Bengaluru facility. The regulator had conducted a pre-approval inspection of these units from September 10th to September 19th.
Cipla receives establishment inspection report for API manufacturing facility in Bengaluru.
And lastly, Vanguard Group acquires 0.5% stake in Vinati Organics at 2,263 rupees per share in a key bulk deal.
Okay, I just want to talk about Titan Industries also, Avinash. We've seen the stocks starting to inch up slowly and steadily. And Friday session obviously was another incremental move that's coming in. Ahead of the festive season, what would you do with Titan?
No, I think, Devina, I think already the stock has seen a decent rise, and I would not be surprised that Q2 could be equally stronger. I think the festive season is definitely going to give a stronger kind of earnings growth trajectory to not only the Q3 numbers, but I think Titan is a high tax-paying company. So obviously, the added benefit for Titan is that they benefit in terms of a reduced tax rate, and obviously top-line growth is going to be better. 4% difference,
because we spoke to the CFO of Titan, and he said that their current tax payment is about 29%.
Yeah.
So it's a 4% positive that comes in for.
Yeah, so earnings growth is definitely going to improve significantly.
Okay, well, another interesting stock from the mid-cap space is Venky. It's just read his head up and very sharply as well, currently at around 1,718. And of course, it has seen a significant up move of late. Ruchit, your view on Venky's, would you buy this? It's not in the futures and options space, but at least in the cash market?
Since August 2018, whenever we have seen an up move in Venky's, all those up move have been arrested around its 200-day moving average, and the stock tends to again correct from the 200-day moving average. So until we see a breakout above 200-day moving average, one should not look to buy this stock. Yes, if we see a breakout above this with good volumes, then one can again revisit or review the stock. But as of now, the 200 DMA resistance is placed around 1900, and the stock prices in last few days has already rallied from a low of 1150 to 1700 now. So I would tend to take any fresh trade over here.
Okay. Avinash, I come to you on the chemical space as well, because there's been a lot of chatter, especially around Aarti Industries, Deepak Nitrite. Any opportunities that you see in the space?
I think within the chemical space, I think Deepak Nitrite looks pretty attractive. I think looking at the kind of capacity expansion they put up in the phenol capacity, I think you could see definitely not only operating leverage kicking in, but I think in terms of prices and in terms of the earnings growth, one could see a significant rise for FY20 earnings. I think I would believe that we could probably see levels of 320, 330, and I think within the cash market stock, it is one of those stocks which has actually underperformed. So I think you could see definitely a strong earnings bump here.
All right. Ashish, you want to comment on the technical front on Deepak Nitrite and also Sterlite Tech?
So we are quite positive about Deepak Nitrite. The reason being, this is one stock which has been consolidating and made its all-time high at 335. Then there was some news and the stock reacted to almost 270. But since then, it has been consolidating between 270 on downside to 285 on upside. And I think it has formed a very strong consolidation pattern. I think there's a strong possibility stock will cross its all-time high, which is around 335. And once that happens, you might see the stock getting complete re-rating towards 380. So I see a very strong potential of the stock giving at least 30% kind of returns from current levels, and I think the risk reward is extremely favorable with 270 as a positional stop loss for going long in Deepak Nitrite.
Sterlite Tech?
Sterlite Tech, I think, so there is a strong uptick in the stock. I think in a shorter term time frame, 196 is what one can expect, but around 195, 196, I would like to book some gains alongside of Sterlite Technologies.
Okay, we have less than a minute to go for market opening, so I'm going to quickly go across to our technical analyst for the top picks. Ruchit, your top pick for today?
I would stay with some of the cash market stocks. I expect some good outperformance in cash market stocks which are non-F&O in today's trading session. So amongst that, I've already recommended two of them. One is the Deepak Nitrite, on which you all have extended a good confirmation as well. And Philips Carbon would be my top pick for today if one is looking from a trading perspective. Go long on Philips Carbon, keeping stop below 123 for target 145.
Ashish, 10 seconds left, your topic.
Yes, I would stick to my calls of ICICI Bank, Lalpath Lab, and for that matter, HDFC Life. These are the names which I like for trading.
All right, all stocks which have been doing well. So, gentlemen, just stay on. We'll quickly come back to you for market opening thoughts. There you have it. The Indian indices, Nifty 50 and Sensex open with a big bang. So it carries forward from on Friday's session of 5.5% and a big 3% jump, 300 points. The SG was still suggesting closer to 150 points. This is double of that and is holding strong. We've surpassed 11,500, 11,600 now for the Nifty 50. Sensex is at 39,150. So a 1,000-point bump up on the Sensex as well. And the Nifty Bank, just take a look at the Nifty Bank. I can't get your eyes of this one. 9.5%, almost 10% on Friday. Another 5% in today's session. 1,500 points on the Nifty Bank. That's 30,500 crossed on the Bank Nifty. These are big levels that have been breached. You've got a range of the last 4 weeks, and that has been taken off in just a matter of 2 days. So the Nifty trend clearly, and for the markets itself, like most have said, the trend has changed. This is not a dead cat bounce. Coming to the individual movers, and before that, just the mid caps and the small caps. About 435 points higher on the Nifty mid cap 100. That's up 2.7%. For the small cap index, we've got gains of about 1.5%. But the focus is clearly on the large caps. On to the individual stocks in the moves thereabouts. So just one, I think about 9 or 10 stocks have been down in the red, and the biggest loser is Infosys, down 1.9 odd percent. TCS, Dr. Reddy. So your defensive pocket, that's your IT space. Pharma as a pocket, that's holding back, and Bharti Airtel is down about 0.5%. But the rest of the screen is extremely green. Take a look at the likes of ITC, Britannia, L&T, Titan is up about 5%. M&M is up about 5.5%. Britannia, I'm not sure what's happening. It's up about 23 odd percent. But Aisha, Maruti, M&M, HDFC, Tata Motors, BPCL, you can just point a finger at the screen and you'll have gains out there. But while the main benchmark index, and this is what it's doing, a few stocks remain to be in focus as well. Remember, on Friday post-market, as you had the GST cut coming in for the hotel space as well, so going to closely watch out for what happens to the likes of an Indian Hotels, Lemon Tree, Taj GVK, all of them up about 8.5% to 9% apiece. So this is an incremental positive across the board. Watching out for all of these names as well. A few other stocks to keep in mind. You've got ratings downgrades that have come in. Brickworks is downgraded, 50 crores worth of NCDs of Edelweiss. And then you have a Reliance Capital, which has got care ratings downgrading its debt closer to $5 billion. So you've got that down closer to about 3.5%. Other stocks in news, and then I'll quickly toss it over to Agam. Petronet LNG and its signed MOU with Tellurian for $2.5 billion investment for 18% stake is up 2.5%. And Biocon gets some observations, but not a meaningful impact on the stock price. Stock's flat in today's session. But Agam, what else is?
I couldn't get my eyes off Britannia, or for that matter, something like an Ashok Leyland. But we'll talk about some of those big movers as far as the NSE 500 is concerned. So Ashok Leyland is one of the top gainers there. It's up 15%. We're looking at gains in Colgate-Palmolive. That's up 9.5%. So some massive gains coming in. A whole host of these, non-indexed large caps, if I can call them that. Mid caps too, we have Lemon Tree Hotels, which is up 9%. We have something like a Shipping Corp of India, which is up 8.5%. And my screen keeps changing in terms of gainers because we have a whole host of stocks which are actually, it seems like, running some sort of a race in terms of an up move here. Because, you also have likes of Indian Hotels. Of course, do remember that there is some sort of a GST benefit that's coming for the hotel industry, which is why we're seeing Lemon Tree as well as Indian Hotels advancing. Bharat Forge is advancing by around 7%. Mahindra Holiday is up and about as well. On the losing end, and again, not too much focus is going to be on the losers, but I'm going to address it, and it's just the usual suspects. So you will have something like Cox & Kings or Reliance Home Finance. Among the more prominent ones, ICICI Lombard is down around 2.6%, but it's yet another day of trade where it's the gainers who are taking it all day, Bina.
All right, and the index itself holding on to very crucial gains of about 3.5%. Remember, when we were taking a look at, from a technical standpoint, there was an expectation that there would be some supply coming in around levels of 11,450. But with this big gap up opening that you've got, that level is left way back. The Nifty FMCG space is up 4.5%. The Nifty PSU banking space is up about 1.9% across the board. Friday's session saw the Nifty auto space up 12%. So that was one big kicker that came in, and today's session just carried forward those gains as well. Nifty Auto as an index is up about 3.5%, and this is a contribution coming in across the board from all of those heavily beaten down names. Real estate also is a pocket. Financials obviously key contributors, the heavyweights that they are there. Nifty Realty is up about 1.5%, and Nifty Finance is up about 3.25%. Avinash, anything that you like and you have a strong conviction over?
No, I think, Devina, I think clearly, within the automotive space, we believe that M&M could possibly, show a better risk reward compared to the other automotive companies. I think considering the fact that it's one of those beaten down stocks, and despite the fact that it's moved up, I would believe that levels of 640, 650 in the very short term are possible. And I think obviously this is also a large, high tax paying company. So obviously here the benefit of a low tax rate and earnings growth kicking in, in the second half and FY21 could obviously re-rate the stock. So I think in this kind of market, probably it's a difficult choice to pick and choose, but M&M could possibly give a decent kind of risk reward.
Avinash, are you tracking walk hard because something's obviously happened given the kind of volumes and the price up move that we've seen here?
Yeah, I think, Agam, this stock has been moving up quite significantly. And I think our sense is that possibly, most of the regulatory hurdles which had stopped the stock from moving up could possibly be now out of the way. And possibly the second quarter could see a marked improvement in the operating profitability. So I think, markets are possibly looking at the fact that, this is one of those stocks which is a high beta stock and had seen very high levels initially. And a beaten down stock possibly could also benefit, hopefully, if the tide turns, and I think clearly that seems to be the what the price is indicating.
All right, Avinash, we'll let you go on that note. Thank you so very much for joining us. Appreciate you taking out the time. That's Avinash Gorakshakar there with his views on the equity markets right now, 11,550. And I just want to quickly take a look at a few other big moves before we get in our next market guest who's going to be joining us. We were talking about how ITC did not fail to contribute on Friday's session and the big moves that came about. But today's session, I think it's making a comeback, 256 on ITC. So a stock which somewhat stays in the doldrums, a sloth in the pack of sorts, has started to see a bigger change in today's session, about 257 on ITC. Ashok Leyland, and Agam highlighted that for us, 9.5%, almost 10% higher on Ashok Leyland. And I just want to pull up a Britannia, because in the morning, I think, on extremely low volumes, just, at the time that we kick-started trade, the stock was up 24%. But immediately post that, the stock is cooled off and now normalized at about 7.5%. But that was a really big trade, about 20% on Britannia for 2 minutes. I was just wondering, what's happening to that stock.
If there was a corporate action in Britannia, that was certainly a
But that was an extremely low volume.
Yeah.
So now, it's normalized, and the stock's come down with volumes of about closer enough volumes as well. Ruchit is also still here with us. Ruchit, anything at open that strikes your eye?
So in the, among the cash segments, Canfin Homes that can be looked at. If we look at last few weeks, then the stock has seen a good consolidation phase, and the breakout from the same is placed about 400 level. So if the stock manages to cross 400 today, then the stock could resume its uptrend. So I would take a conditional call to buy the stock above 400, then keeping a stop loss below 370 and expect short-term targets around 440 to 450.
Okay, Ruchit, we leave it at that. Thank you so much for joining us and talking to us here on Bloomberg Quint. But it's time to get in a special fundamental voice. We have Rahul Singh, Chief Investment Officer for Equities at Tata Mutual Fund, who joins us on the show. Rahul, good morning. Thanks for joining in. Of course, quite a lot of things have changed quite substantially since Friday and the Finance Minister's announcements. How are you reading into the announcements, and what are you seeing when it comes to, well, change in your EPS estimates?
Yeah, hi, good morning. First, on the EPS estimates, I think by now everyone knows that it is to the extent of 8-9% on Nifty EPS. So that's the mathematics of it. But I think beyond the mathematics, we are seeing a stimulus from the government which is actually more pro-investment than pro-consumer or pro-consumption. So that is what the economy needs. I think that is the message which has gone out loud and clear, that government wants to encourage investments, which is going to be the ultimate driver of consumption and savings. So I think that message and that logical thought process is, I think, what the market is liking. We also sense that this is a significant inflection point in terms of what it might do to the way foreign investors might be looking at India. So technically also, I think the momentum of selling might reduce. I think given that and the fact that domestic flows are reasonably consistent, I think the valuations have formed a bottom. From now on, it will be the pace and the extent of economic recovery over the next 6-9 months which will drive the valuations up and ratings up.
How has your earnings and EPS forecast changed in terms of individual sectors? Now, earlier on, all the conversations revolved around earnings growth for the year in low teens. Does that change materially?
Yes, as I said, the low teens goes up back towards 20% or so. So that's a significant upside, and I think what this move does is that whatever the downgrades were happening and were left to happen over the next quarter or so, this takes care of that in a way, and we are back to 20% kind of growth, which is, mind you, is the highest growth over the last 4-5 years if you look at it. And the valuations are reasonable. I won't say very cheap, but valuations are reasonable compared to the 5-10 year history. So in terms of individual sectors, I think clearly the sectors which have, it's easier to say which sectors have not benefited from the tax cut rather than saying, counting all the numerous sectors and stocks which are benefiting. So I think IT and pharma obviously have not benefited from this. Any company which was in losses is obviously not benefiting from this till the time they start making profits. So to that extent, that is, there are obviously hits and misses. But I think the broader message is what is more important. I think the overall outlook for investments would start to look up. There is now a case for attracting investments into India, because earlier the sheer difference in the tax rates between India and the other markets was 5 to 10%, and that was a big enough deterrent for, apart from other issues around land and labor laws, which should be the focus of the government, was a big enough deterrent for the investments not to really take off in a big way.
Rahul, sure, we've seen tax cuts come through, but when it comes to the consumer sector, there's still the fact that we're seeing a lack of volumes, and I think I can just stick to the auto sector. What is it that you'd like to see before you start seeing a genuine change in the auto sector? What sort of an uptick would you like to see when it comes to volumes, if you're working with any sort of numbers in this aspect?
Well, I think the auto industry is in a position where a lot of things are changing. There is an environmental norm, there are safety norms, there are insurance costs, and then the whole discussion around EVs and how the government wants to promote EVs. So there are multiple factors. It's just not economic slowdown led. It is also behavioral issues which are impacting the auto, the auto numbers really. So I think the auto industry needs to really take a call as to how they want to use these tax cuts in terms of passing on some of this benefit to the consumers and trying to revive demand, or do they just retain the profits? So I think I will wait for those signals and see what the auto industry does with these tax cuts. because that is very critical to revive demand. And otherwise, you are part of the same economic cycle. As I said, if the economic recovery happens over the next 6 to 9 months, we would start to see that in auto numbers as well. It is but natural. And then there is a base effect also. But it is now, I'll probably wait for some signals from the auto industry before we get more bullish on autos.
Okay. Quickly, Rahul, does your outlook change for the capital intensive space and the infra space?
Yes, I agree. I think the capital intensive or the capital goods space, and there are not many companies to really choose from. I mean, there are some large caps, a handful of large caps, and then there are a lot of mid caps probably which will gain more than large caps. I think the investment cycle really has a good chance of now getting a shot in the arm because there are companies or there are industries which would now be trying to set up shops in India given what's happening with the US-China trade war. So I think there is a real chance with this tax cut to attract investments. But as I said, there are land reforms, there are labor reforms which are still to be accomplished. I think also the fact that there are companies which are right now in a leveraged position, that most of these tax cuts might initially go to service the debt and get the balance sheets in place. So therefore the organic capex cycle of the Indian companies might take time to revive. I think what we are talking about really is if you can generate inorganic sources of capital goods cycle, which is attracting investments from companies which are not present in India right now.
All right, got your points, Rahul. Thanks very much for joining us. Appreciate you taking out the time and sharing your thoughts on the show with us.
Thank you.
All right, we're going to take a very short break. The markets are up and roaring. A very special chat with Jain of HDFC Asset Management on the other side. Stay tuned, you don't want to miss this.